A mining property boom. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of Heise Says. I have my stein of coffee and I thought we'd have a look at this article this afternoon from the ABC about the house price rises and spikes in some of these mining towns. Now if you're not aware, a lot of these regional, very remote towns had a boom in construction and a lot of the houses just shot up insanely high in property values. And there's lots of stories about people being leveraged to the hilt to build developments there, real estate agents just buying tons of houses at overinflated prices and then it crashing. Because a lot of this was all dependent on the infrastructure investment in these mines. You know, we got work for these mines. These new mines that were starting up, they need to build all the buildings, they need to house all the staff, all the construction teams need to be accommodated. But when that work dries up and the mine's just in operation, it doesn't need the same amount of housing, and often you'll have fly in fly out as well, which will change it too depending on the town. So let's go through this article because it's saying now it's rebounding and it's shot up 30%. But how much did it fall beforehand? So mining town real estate is rebounding, according to new figures which show both house prices and rental yields are rising in resource-rich areas at a faster rate than city housing markets. In Western Australia's East Pilbara, home to the iron mining towns of Newman and Marble Bar, house prices have risen almost 30% in a year and rental yields sit at a healthy 14% on average. Okay, it is a similar story on the other side of the country, where house prices in Queensland's Central Highlands region, which encompasses the coal mining towns of the Bowen Basin, have jumped more than 30% in the same period. The price hikes come off a low base and after years of plummeting prices that followed the end of the mining boom. So yeah, okay, and we're talking serious plummeting prices here. In July 2012, the median house price of WA's East Pilbara was $880,000, but by July this year, that figure had plummeted to $170,000, a massive 80.5% slump. So just think about that. Think if you borrowed 800, you had 10% deposit, you borrowed 800 grand to buy a house in WA's East Pilbara for some reason in 2012, and now it's worth 170. Just think about that. How the hell would that make you feel? So some WA mining towns have seen huge growth in property values in 2019. So you can have a look here. Port Hedland, Ravensthorpe, Kalgoorlie, East Pilbara, and all these names are coming back to me of all the mining work we did back then. So wow, so many of them. I mean, we were just flat out. We were flat out. It really helped me my business start and grow. It was crazy. So house prices in Port Hedland dropped almost 75% in the same period, while the coal mining region of Isaac in Queensland saw house price falls of 80% to an average of $124,000. $124,000, and I'll make sure we get all of that there. So that's nuts. CoreLogic research analyst Cameron Kusher said the plummeting prices have finally brought renewed interest from investors. Well, yeah, an 80% fall. 80%. Sorry if I sound like I'm dwelling on that, but that is a huge difference. That is tremendous. I mean, look at that. At least rental yields are, decent, but in change in value. But the rental yields are decent because of the huge drop. The huge drop. So, I mean, this is what happens when a market overheats. This is probably a micro example of, I'd say, our national housing market. But think about this as an example here where it was foreign investment into a community, foreign demand with the workers coming in, construction workers were only there temporarily, and shot up that pricing to insane amounts. I still can't believe 880 grand for an East Pilbara house. This is a house in the middle of nowhere. Okay, a middle of nowhere, a little specky house. The most expensive thing will probably be trucking the materials there. Yeah, wow. The price crash was brought on by a number of factors, but the major reasons were that the mining boom ended and commodity prices fell, along with the fact that mining investments saw a sharp slowdown as many of the mines shifted from expansionary phase to production phase. He said, yeah, that's it. I think that has a big part of it. A big part of it, because I know we were working on projects and they had to accommodate all the construction workers in some of these towns, particularly the ones we were working on at Dornier and Caval Ridge. The production phase typically requires far fewer workers than the expansion phase. So in this context, fly and fly out workers certainly did contribute. So there you go. Let's have a look here. Queensland mining town properties are starting to recover from the big post-boom losses. So you've got Central Headlands, Gladstone, Isaac and Mackay. Their growth, but look at the change in value there. What do we have? Central Headlands down 45, 50%. What's this one? Isaac, 80%. Mackay, 20%. Gladstone, 40%. 40%. I remember reading stories where families would just stay in a tent in the back of their house and they'd rent it out to mine workers because it helped them pay off the mortgage really quick because the rents were that high. Because they needed somewhere to get their teams accommodated. There's just no accommodation. I'd be interested to see how all these, I think there was hotel, like managed accommodation for mine workers. I'd be interested to see how those businesses were going, because I remember walking around having coffee meetings and trying to spruik up work for them. Or with them. You know, I wanted to work for them. Mr. Kusher said mining investment had begun to pick up again, as had commodity prices, in turn contributing to a stronger housing market. Okay, now that's a little concerning that they're talking about commodity prices picking up because of the stronger housing market. And I'll bring up some trading view here. Let's have a look at where our commodity prices are going. You know, we'll just jump here. So we'll have a look at commodities, down. Silver, gold is up and everything else in the red. Well, that's because yesterday we had the tremendous price fall because of Trump's tweets. And I was just talking to someone before about how you can do all the technical analysis when you're investing or trading, and it can all be destroyed by just a tweet from the President of the United States. So let's have a look here. Look, iron ore, it's up 87%. Whoa, $87. That's it dropped even more since the last time I looked at it. So there you go. There's the iron ore price. So it's heading down. And I know that's a lot of the Western Australian market. We'll look at coal. What do we got here? Coal. How are we sitting? Let's go to 1 month figures. You can see there, it's gone out of 67. Yeah. It's not at the most recent high in 2011. That's when the boom was. Right then, 2011. I remember when we were working on the stuff there. It was at $130. And then as it started going down for these materials, we'd get projects where we'd have to like scale back an entire design to make it even more efficient and more cost effective. Just simplify it, remove all the luxuries. So there you go, from 130, so it's halved in price almost since the peak. So it doesn't look like it's going up. It doesn't look like it's going up. And they're the two resources to watch. So Newman houses in demand as businesses go ballistic. So, okay. Yeah, I'm a bit skeptical about it, but we'll see. We'll see what they have to say. Newman real estate agent, Brett Phillip, a real estate agent, obviously 100% reputable, has seen firsthand the reversal in real estate fortunes. The town, about 1,100 kilometres north of Perth, is home to about 7,000 people, many of them employed in the nearby BHP iron ore mines, with a further 4,000 workers on a fly-in, fly-out basis. Mr. Phillips said during the downturn from 2012 to 2013, the big miners cut back on maintenance of many company-owned homes in Newman, resulting in them falling into a state of disrepair. And you can see that here. Now, they're having to spend triple what they saved in maintenance to bring them back up to scratch, he said. Mr. Phillips said the rising iron ore price and ongoing demand from China has led to increased mining activity and a resurgence of business in the town. When was this written? Today. Thursday. Oh no, posted Thursday, 6 o'clock. So this isn't that old. This isn't that old. Well, okay, mate, I hate to burst your bubble, but the figures I'm looking at from when the market just closed, it's not going up. Now there's no vacancies in the shopping centre, and the industrial commercial sector is going ballistic, he said. Everyone's happy in small businesses again. He said the situation had changed quickly. That's the problem. It can change back just as quick. But at the moment, things are very active, and we're struggling to keep up with rental inquiries. I've got a 4-bedroom, 4-bathroom house on the market at the moment for $650 a week, and I've got 2 companies booked in to look at it. Anything modern or in a good location is getting lots of interest. Analysts doubt prices will return to boom peaks. Well, yeah, no. I mean, we just looked at it. To go to the boom levels of coal, you'd have to double. And the iron ore, I'll just look at that here. I mean, we'd have to go up again. It's shooting down. I hesitate to say that they never will, but I think it'll be a long time before prices hit that level again. Particularly with what's happening with the trade war, for better term, between China and the States. I mean, I guess people have to park their money somewhere, but I don't know. Maybe I'm just too skeptical. Maybe I'm reading too much stuff and talking to too many people that are worried. I'm 38 years old, and I doubt I will see prices as high again in this location during my lifetime. Some growth is supportable, but I think long-term ongoing price rises are potentially not. Mr. Kusher said both investors and lenders were likely to be more cautious after the downturn, and coal mining towns were particularly susceptible in the future. Certain mining areas are also likely linked to commodities that have become less in demand, and as the world becomes more environmentally sensitive, demand for thermal coal, for example, is likely to reduce, he said. Yeah, we'll see. I think that's bullshit, to be honest. I think there's whatever will be decreased by maybe 1 or 2 coal mines in Australia will be sucked up by a lot of other countries that don't fall for it. That's just my opinion there. I'm a bit skeptical about it all. But in the immediate future, Mr. Kushner said mining towns were enticing for investors. As interest rates continue to fall, investors will be attracted to higher yielding investments, and the yields on offer in mining towns from that perspective are quite attractive. So, I mean, sure, but will it remain? With the current price of coal, the current price of iron ore, it's not going up. I don't know what he's saying. I don't know where they're getting that information from. What do you think, guys? Let me know in the comments. Are you rushing off to buy in a mining town? Anyway, thanks for watching. Like, share and subscribe, and I'll see you next time.